Today we're going to talk about sizing trades, and I'm not going to talk about how to size trades. I'm really going to talk about how to teach yourself to size trades. So that's something that I'm working on a lot right now. You know, to take my trading to the next level, I really need to be able to push the size of my trades a lot more. And that means figuring out where I can get my stops tighter, you know, where I can get in and how I can cut it really fast, my position really fast if I'm wrong. And so the way I'm doing that is by, you know, going back over and looking at how the day went and then debriefing that. So this is one example here where there was a trade that I really liked and I put the trade on and then I had a few goes at putting extra size there, and actually every time I did that I was trying, I think, too hard to put size on and not doing it in the right places. So sort of like trying to force it rather than kind of trying to be in sync or in the flow with the market. And so anyway, I went back over it and made some notes, and that's what I'm going to share with you today. So this debrief is on the German Bund. So that is the German 10-year bond. Now, a few of you, I think, or a lot of you trade like the S&Ps and equities. Right now, bonds are such an interesting space, so I think it's something you should take a look at. Not necessarily this bond, but it could be US Treasuries or whatever, because, you know, there are times recently where bonds are a much cleaner trade. Like, for example, you know, inflation data comes out, or actually PMIs is a great example. A couple of days ago, PMI came out, and it was a big beat, and so, a big miss, and so you got a bond bid on it. But then equities are sort of caught, well, are we trading the central bank reaction function, or are we trading recession? And so they kind of get caught in choppy and can't really go anywhere. And so this just gives you another, or the bonds give you another way that you can trade, you know, different things in the market, potentially a little bit cleaner. Now anyway, so to the debrief. So this is the German 10-year bond futures. Now, what I was looking at here was this sort of this balance or this range going on in here. And so this market was kind of trapped in this zone, right? It had maybe 1, 2, 3, 4, 6-ish days in here. Now at the bottom of the range, it had this really big tail here, this big rejection, and then it had another one here inside, and it's sort of been holding above that. And so I thought, well, the response of the market, so whenever it sold down, it got picked up so aggressively, and that really made me think that this market should trade higher. Then when we go and look at the highs, well, I thought these highs were poor because there's a lot of highs like pretty much at the same price. So there's one example, and then here is another example, and then here is another example. And so I thought the odds of the market going through there were quite high. Now, I just needed to find a way to, you know, I suppose I had an idea there, but I needed to turn it into a trade, something that I could execute on and define my risk. And so then, oops, I better get rid of this, sorry. And that's where, you know, going into sort of the lower time frames. Actually, if you're a profile trader, the profile's probably told that story the best, better than the 30-minute candles. Like, look at the shape of this profile down here. So again, if profile is something you want to go into, go check out some of our other videos. And what happened that was really nice here is that you had the market really position up against the first set of highs. And there was an iceberg there, which is an order flow thing. So again, go check out some of our videos on order flow if you want to learn more about that. And when the market went through there, you can see the market just sort of bid away, and it left this low volume area. And that was the access that I used. But then I wanted to look at, you know, how can I really sort of get more size on? And then, you know, you break this down and you really get into the nitty gritty of it. And so here the market came up and it topped out here and then went up here again. So now you've got like a few TPOs if you're a profile trader just pushing up against that level. And then what happened with this little bit in here is you had the Canadian CPI. And you might not know so much about this, but basically it sent a bit of an offer into the bonds. And the fact that as the market tried to offer, and this is best demonstrated on the footprint, you had a lot of selling, yet all of these footprints are overlapping. The market wasn't really able to go down. And so when the market eventually went bid, that was a time where you could get into the market a little bit earlier. That felt uncomfortable, of course, because it hasn't broken out yet. But you just needed to assume in that instance that the odds were that the market would break out, and that leaning into the unknown was the first good access. The second good access was that once the market had been over there, and any footprint lovers out there will see that there was nothing sold here. And so the market pushed through that high, so you got stops, and the market just held any selling here. And then that was your other time to add, and you could have your stop down here. And that gave you a massive opportunity, to really leverage some size in there with like 5 or so tick stops. So that was how I went back and broke this down. And to do this, I put all my charts in here, my footprints, but I also went back, watched my ladder recordings, and then went through and made some notes. And so you can see what I've just described to you. I've got in more detail up the top, why I wanted to take the trade, how it's set up and how I should access it, and then how I should manage and hold this trade. And then, I went through and thought, okay, what are the things I thought in the moment that I was telling myself that were wrong, and then just tried to correct that understanding. So anyway, that is my debrief. So anyway, if you're also trying to work on size, think about doing your debriefs a little bit like this, and just ask yourself, where could I got more size on? How could I have controlled my risk a little bit tighter so that I could have clicked a couple more times? Those are all the questions, and debriefing is such a good way to sort of up your game so that the next time you start trading, you can trade better. So this is an example of why debriefing is so important for us here at Axia. Now, I would like to hear from you as well. So if you have any tips, things that you've found that work really well for your learning and that you use in your debriefs, please share them below. I would like to learn from you, and I think everybody else would. So if you have something really good, please share it, and you never know, you might see it up here next time. I mentioned a few things here, footprints, order flow, profiles, go and check out and follow us on all your favorite social media. We have lots of stuff about that. We also have lots of courses, so go check out our website. And and then we can obviously help you.